Kaleeswaran Arunachalam, the CFO, now joining in. Thank you so much for taking time out. Mr. Kaleeswaran, to begin with, it's been a strong growth in the quarter, and that's largely been led by the bumper summer. What is the demand trend now that the growth expectation is going to be set out for the rest of the year? What are you penciling in?
I'll take this in two parts. I'll try to decipher the Q1 results, and then subsequently we dwell upon to see what is there in store for the future. See, as we completed Q1, this is our fourth quarter as part of our Crompton 2.0 strategy, where we came out and said Crompton is going to be an organization that is growth oriented and focused on absolute profits. This meant that we need to augment our investments behind brand, people, and innovation. Our innovation team, which is one of the best in class that you'll see in Vicroly, has come out with many new products. Some of them are industry first in nature. Our investments behind the brands have been stepped up significantly. For the gone by quarter, our investments in A&P has been at about 4.5%. Similarly, we have also ensured that our unit economics are not compromised across channels, which meant that in spite of the regulatory changes and other commodity cost increases put the pressure on the cost side of the business, we were able to take consistent price increases over the last 4 quarters. As an outcome of that, which also underpins the execution excellence the company is striving to achieve, coupled with a better summer, has helped us to deliver a fantastic Q1 with about 21% growth in ECD, and also able to arrest the decline in our lighting business and get back to growth, and Butterfly showing early signs of moving in the right direction. So, in far as the future is concerned, we have always said, as part of the Crompton 2.0, our endeavor is to grow our business in double-digit revenue as an overall portfolio, and grow our profits better than the revenue growth. This means that our investments behind the brand, people, and innovation would continue, and each of the segments that we operate in, let it be fans, lights, pumps, etc., have got their own strategy and tailwinds to drive this growth for the future.
Right. So could you give us a quantum with respect to the growth rate?
We don't give specific targets out, and we don't give future guidance. The way I would see is for the last 4 quarters, the business moved from about 10% growth to 14% growth on a consolidated basis right now. You can look at that as the range that we want to look in future. I'm talking about this including Crompton plus Butterfly together.
And the company's ECD margins are the best among the peers. Do you think that these levels of 15% look sustainable?
One of the things that we touched upon earlier, for business to grow in sustainable manner, unit economics becomes absolutely critical, right? Over a period of time, we have been looking at multiple levers to ensure that we continue to be a margin leader in the categories that we operate. This starts with a very robust cost program that we have got, that you all would know in the name of Unnati. We have been working on multiple initiatives, including value add, value engineering, tapping on the technical levers and commercial levers, and consistently see opportunities to reduce the cost base on which we operate across all areas. Second is how do we try to work upon the mix? As you would know, as a country, we are seeing a massive opportunity in premiumization in category after category. That helps us to play significant amount of improvement in mix across the categories that we play. It could be a premium fan, or it could be a ceiling and battens in case of our lighting categories. It could be a premium air cooler that we sell, so on and so forth. So mix plays a significant lever in terms of how do we improve our profitability. Third is pricing. I think as a market leader in many of the categories that we operate, it is our endeavor to ensure that we take optimal price increases at the right point of time so that the unit economics never gets compromised. So these three levers would continue to be worked upon to ensure that our margins are robust, and we don't grow the business at the cost of margins.
Well, the growth in margins for the lighting segment remain muted for you. What's the outlook really on margins going forward?
The price erosion has taken away a little bit of sheen on the bulbs, but the glad news is ceiling and batten continues to grow in double digit. One of the called out strategy that we talked about in lighting is we will focus on premiumization and try to grow the premium parts of our lighting portfolio in B2C. We're already seeing good, robust mid-teens growth in our ceiling portfolio and early double-digit growth in our battens business also. So as we look forward, the fundamentals of lighting business is getting right. Lighting is a category we never advertised in the past on the brand. This year we have started doing that. We've spent almost 2.5% of our revenue towards advertisement investments for lighting, and that has also helped us to grow the premium portfolio. One of the things that we have kept in mind, in spite of the pricing challenges this business had, is we will not compromise on the margins of lighting. So as you could see it, we still continue to have robust, expanded gross margins in lighting business and strong EBIT margins at an overall basis, in spite of investing behind the brand towards advertisement.
All right, and finally, you've also got Butterfly Gandhimati sales that have fallen this time around about 19% on a year-on-year basis. Margins are at about 2.3% on year. Are the channel actions complete?
See, the called out strategy that we talked about on Butterfly is H1 is going to be a time where we wanted to ensure that our price actions, channel actions get completed, which means that even if H1 is going to be a decline, the idea is we get the business healthy and poised for growth as we look at H2 onwards. But when we do this in H1, what was important is get the business back onto the right profitability levels. Now, if you look at Q4, the worst was probably behind us. We had significant amount of loss on Q4. Now, sequentially, we have grown the revenues compared to Q4. We've also delivered about 5% EBITDA in Q1. As we look at H2 onwards, the business should get back to growth and start to deliver about 7 to 8% EBITDA and then improve from there onwards. So the early signs that we see are positive in Butterfly, but still a long way before we complete it.
Okay, that's the word coming in. Thank you so much for taking the time out and highlighting how your earnings have panned out in the quarter gone by. Let me now welcome